So moving over to explaining how we caught last week's move and the major structure. As you guys know, I do my analysis. I start my analysis based off the daily, and from the look of the way market was, this was the previous structure alongside this, and market actually came down. You know, had a little fluctuation of fight in the zone before it finally broke. It did not really retest, but it is what it is. Now coming down to my H4, which is a really main significant structural time frame for me. This week was, I would say, one of the best in terms of structure, because technically market was giving lows, 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 and it was pretty obvious that we had to sell. Okay, we got this. Okay, we got this. We got this. We got this. These are all lower highs. We got this. We got this. We got this. We got this. And then we started getting internal structure like this and this. Likewise, the lows, guys. Likewise, the lows kept on going lower and lower. So, okay, let's take this off. Now, if you observe what market did last week, market actually fought in this zone. This is actually the zone we're concerned with, starting from on the 9th of November. And then market did all this before it finally broke the zone down. And then coming down to the H1, we knew for a fact that this is a strong bearish market. We didn't really get that retest that we wanted, though we might have on the lower time frame, but on the 1 hour time frame we didn't get that retest that we wanted. And the market actually came to this zone. Most people will call this zone a supply demand zone, but I just see it as a PRZ level, this zone. So most people actually saw this zone and they waited for market to create a lower high, which it did right here, and they took their sells off this zone. But I didn't really catch that sell. I caught the sell after this low was broken. So I knew that market created this low to create a high. And since this high that market actually created after making this low was not broken by any of this structure, the new low is definitely going to break. So it was a very wide risky trade. I had my entry right here, then my stop loss was way above this zone. Not advisable. It was like an 80 pip stop loss, but then it was actually worth the risk because I was targeting somewhere around this zone. It was a 1.5 times my risk. So that move was actually clean, and then after market created this low, this PRZ on the H4 on daily was rejected real good. Like you can see the wicks, buyers actually came in at this point in the market, and it came straight up to this zone, but still did not break these highs. Okay, fine. Market didn't break these highs, telling us that the bears are still pretty much have a strong hang in the market. So we held and looked for selling opportunities. I didn't catch these sells, to be honest, but before market actually crashed, market did something um, significant. After market came to this zone, market created this. These two candles are really, and then it broke down. Now these two candlestick formation, there's a bearish candle with no wick to the top side and a bullish candle that has equal wicks on both sides. Market always comes back to retest. Always. You can do your own research and look for it. Market always comes back to retest zones like this. Now that was the zone that I targeted. This zone. This zone served as a form of supply because market tried several times to hit the zone again. Now after market broke down, came back to this PRZ retested, I had a sell limit here. I posted that on Thursday, I think on Thursday. Yeah, I posted on Thursday. I had a sell limit here, and then I had my stop loss above the highs of the previous bearish candle. This previous high momentum bearish candle that tore down the structure, and then I had my TP at this zone, my black line. It was a 5 times my risk. It was actually a 20 pips stop loss to gain 100 pips, and the trade, well, took a long range and consolidation, but eventually broke out of the range, and it did what it did. And before that, I actually gave a breakdown of what market was expected to do. Let's take this off. Of what market was expected to do, since it's creating series of lower highs and lower lows. It's definitely going to crash, and on Friday it broke the lows. Now market is doing this. I believe this year is going to close bearish. Now market is doing this, excuse me, this and this, and then it has this lows, this low, this low. Now market just broke structure, closed under to create this low. Now that's simple market structure. Market broke structure and broke PRZ levels. Market broke this PRZ, meaning market is going to come down to this zone. My PRZ levels, I don't just draw them based on just drawing lines like chart. I make sure I get wicks, like rejection, key rejection zones. Now market has to retest this zone. I personally see market coming back to this zone right here, this. So I see market hitting this zone because checking the 1 hour is also a PRZ level. For those who use Fibonacci, you can draw your Fibonacci and pinpoint your 618 rejection. Alright, let's do that right now. Previous bearish candle, a broke structure to the bottom candle. Alright, now we got the 618 right here, and then slightly above it. On the H1, we still see the rejection. Market did not retest, just the way it did over here on the same structure. So, and we had similar candlestick formation here, bearish candle, bullish engulfing candle, though little or no wicks to the upside, and similar candles. You can see the exhaustion in the candles before it finally broke. So I see market coming back straight to the zone right here before further sells if it's going to break structure. Take this one off. So purely from structure, that's what I currently see. Excuse me. That's what I currently see. Now I don't really want to complicate my chart. That is why I don't talk about order blocks, liquidity zones, um, breaker blocks, and all this kind of shitty stuff. I really don't like to complicate my chart. A lot of people will tell you there are a lot of liquidity spot, imbalance. I know those stuffs, but I don't really use them because I've stayed long in the market enough to know that they are all the same. Order blocks, ICT model of trading, and normal institutional way of trading. You just have to see things with the bigger picture, bigger perspective. That's all. So I see market rallying back to this zone, before market finally break this structure again to this zone for almost 100 pips. 150 pips. So that's my zone. Can't wait to start doing live webinars. It's gonna be dope. Clean, clean, clean. You don't got clean traffic to the left. Over